Leasing a car has become a popular option for many individuals looking to drive a new vehicle without the commitment of ownership. While leasing provides several advantages, it also comes with specific insurance considerations. Car insurance for leased vehicles in the USA operates differently from insurance for owned cars. In this article, we'll explore how car insurance for leased vehicles works in the USA and what you need to know to ensure you have the right coverage for your leased car. Lease agreement requirements. When you lease a vehicle, the leasing company is the legal owner of the car, while you become the lessee. The lease agreement typically mandates that you carry certain insurance coverages throughout the lease term. Mandatory coverages. The most common insurance requirements for leased vehicles include liability insurance, comprehensive insurance, and collision insurance. A. Liability insurance. This coverage is mandatory in almost all states and provides financial protection in case you cause an accident resulting in property damage or bodily injury to others. B. Comprehensive insurance, also known as other than collision coverage. This insurance protects against non-collision damages, such as theft, vandalism, weather-related damage, or hitting an animal. C. Collision insurance. This coverage pays for repairs to your leased vehicle if it is damaged in a collision with another vehicle or object. Minimum coverage limits. The leasing company may specify minimum coverage limits for liability, comprehensive, and collision insurance. Make sure your policy meets these requirements. Gap insurance. Leasing companies often require lessees to have gap insurance. Gap insurance covers the difference between the actual cash value of the leased vehicle and the remaining lease balance in the event of a total loss, for example, due to theft or severe accident. It helps protect you from potentially owing more than the car is worth. Additional coverages. While the lease agreement may specify minimum coverage requirements, you can choose to add additional coverages like uninsured/underinsured motorist coverage, medical payments coverage, or roadside assistance for added protection. Naming the lessor as an additional insured. Leasing companies typically require you to name them as an additional insured or loss payee on the insurance policy. This provision ensures that the leasing company is informed in the event of any changes or cancellations to the insurance policy. Cost considerations. Insurance premiums for leased vehicles can vary based on factors such as the type of car, your driving history, and the level of coverage you choose. It's essential to compare quotes from multiple insurance providers to find the most competitive rates. Conclusion. Car insurance for leased vehicles in the USA is subject to specific requirements outlined in the lease agreement. To comply with the leasing company's guidelines, you must carry certain mandatory coverages and meet any minimum coverage limits specified. Gap insurance is crucial for lease protection, as it covers the difference between the car's value and the lease balance in case of a total loss. By understanding the insurance obligations and ensuring adequate coverage, you can drive your leased vehicle with confidence, knowing you are financially protected throughout the lease term.